Morning traders, this is Paul with GammaEdge. Today is Monday the 6th of September. Let's get started. Pause your players here, read this to the end. If you agree, hit the play button. Summary for today, primary market models are all in the downtrend. We are unchanged since Friday's status. The short-term trend is down. I do think it could reverse upward today. We'll see. Intermediate trend is down, long-term trend is down. Wing charts are bearish, with the red wing clearly dominating the green wing. This is the cumulative net cumulative gamma on the red side and net positive gamma on the green side. You'll see that here in a second. Watch for OI changes. We are still seeing a large number of puts going in relative to the calls. Where they're distributed out in the expiries will matter. We are seeing both calls and puts in the short term, with more puts going out into the longer term. Looking at the PBI charts, we believe it's very unlikely we're going to push above the 4,000, 4,005 into the close. There's a large negative delta notional up at that level, well over 70 billion, and there's no precedence for pushing and holding into the close on something like that. Downside 3,900 is a major level. It's minus GEX. We're seeing 38 also develop. Note that both of those are developing in such a way that looks like it's all long puts that are going in. So we're not seeing a corresponding amount of, for instance, if these were all debits, we're not seeing a corresponding series of short strikes go in. We're seeing all long strikes go in on the put side, which tells us that folks are getting ready to participate in more downside. We'll keep looking for that, those short puts going in, but until we see that, assume that the growth of the put side is going to continue and forewarn a negative downward movement. Cumulative tick, which is our primary market model, intraday on Thursday we started seeing this transition that you have here, end of day here at circle 2. We've gotten this confirmation of the long-term ribbon rolling over, and when we see something like this, your bias should be to the downside. Sure, you can try to rally, but the rallies will fail in this condition, so we're not seeing that strength that everyone would like to see. On the short-term side, though, we've had multiple days of a downward trend. This is the cumulative tick here, and here at circle 3, the short-term trend moving up and putting in a little bit of a higher high on this relative to where we were, where we closed the day on Thursday, indicates that we should be closing our shorts on a shortest term basis, and looking to see what the next movement's going to be. Now, as it turns out, we did fail back below. The downward slope here tells us that the bias is back on, risk off into Friday afternoon, and sure enough, we ended the day. Short-term trend was down, was confirmed into the end of day. Because we are below the ribbon, the intermediate term signal is down. So long-term trend is nailing the coffin shut, intermediate term trend is down, and the short-term trend is currently down, but we could see more of this noise that you see here, and we could see a potential rally upward. Don't think it'll be long-lasting, but we'll see. The SPX condition, when we take a look at the cumulative gamma on both the put side as well as the call side, you can see we're seeing a large dominance of negative gamma. This is the SPX combo, which is the algebraic addition of the AM settled and the PM settled here. Just be aware, AM settled, we're actually seeing some bearishness here with a slight increase on the put side and a slight decrease on the call side. Getting kind of a mixed picture over here in the SPXP, which is the PM settled. These are your dailies, which trade every day. And these two roll up to provide a fairly mixed signal over here in the combo. This is the one we're watching. The AM settled is the most important, we feel, because that's your institutional money. We are seeing a little bit of drop here, but I will say it's not aggressive. It's not aggressive at all. Taking a look at the fish pond that JB has gracefully constructed, or graciously, excuse me, constructed. Friday's close here. You can see we do have some lower numbers. We're in the reds down here. Look for some opportunities potentially to move upward. But I do think it is very, very possible that we could hold in this area, test these lower numbers for a little bit longer, and then potentially rally up. Will we get back up into the greens? I doubt it. But nobody knows what the future is going to hold here. SPX OI changes, as I said. Watch the put side. We're seeing a large addition of puts going in. Not so much in the way of calls. You can see, look at the scales here. Major divisions 20,000 on the call side, major divisions 50,000 on the put side, and we're seeing actually the distribution here just in overall magnitude. We're seeing more and more puts go in. We've been seeing this, and so this is not a surprise. It's not a change. Just be aware of the auto scaling that occurs here. Puts are outpacing calls in the SPX. When we take a look at the key levels, upside 4,300 is positive gamma, very, very negative delta on that. When we take a look here, COI, POI unchanged. These are illiquid. They've been there forever. Minus GEX sitting down here at 39, and we are seeing the growth of 38. You'll see that here shortly. I have drawn the lines corresponding SPXP, which is the PM settles, and you can see there's still a lot of little levels that are hiding in here, and be aware of those. Expected move a little bit higher today. This is a conservative value. I don't think we're going to push upward into the 4,055 range. I think it's going to be very, very hard to stay above that 4,000, 4,005 area that I talked about. Taking a look at the 0 DTE, very, very large amount for 0 DTE. Part of that's probably the holiday weekend coming off of that. So we do have a fair expiry, especially for Tuesday, that's occurring today. Here's the expected range. Very, very clean transition here at 49.65, 49.70. Not that it means much, but moneyness shifts. So this would be a balancing point where moneyness, due to the 0 DTE, where the pressure here today is going to be minimal. Watch that. Some people have the conspiracy theory of max pain. We don't subscribe to max pain, but if we were to look at the distribution of moneyness, you can clearly see, the eye clearly sees that the transition's right in this area for that moneyness, and we'd want to pay attention. Now, I will say, when you take and sum all these numbers, there's a lot more negative numbers on the put side than there is on the call side. So it's still heavily favoring puts coming off today in the 0 DTE. In the combo, a little bit of a mixed picture. I want to draw your eye down here to the lower right. Significant amount of gamma is expiring with this OPEX. We're all the way up to 26%. We want to keep an eye on that as we go through. So 26, 29, 33 are coming off now, between 33% of the SPX combo is coming off between now and the OPEX. And that's a fair amount. That's over $2 trillion. That's poised to come off. Draw your eye up now here. This is where I said we have that illiquidity. COI and POI still remain up here. They're not really changing a lot. They're just not budging, in fact. We do have this combined area up here, almost 80 billion, call it 79 or 80 billion. We've not had precedence of pushing up and holding through a layer like that. It just doesn't happen. That's a lot of absorption by the market, and we're not seeing it here today. So if you have an opportunity to sell something up here, always watch it. Paper trades, of course, but that might be a good play. JPM is sitting up here at for those 930 expiries, 46,700 contracts sitting at 4,005, and that's given rise to this negative number that you see here. Large amount of negative deltas also will impede forward progress, so we're just not seeing a reversal to the upside of any strength or magnitude. Downside, very mixed picture, a lot of places to hide. Here's that 3,900, here's that 38, and you can see relative magnitudes are actually growing pretty much, even though we're well away from this, so that's pretty important. Low range today puts us just below the 38, so pay attention here. Also look, the magnitudes that we see here are not overly large, and with the transitions back and forth through here, it would make us being able to move up and down here pretty loosey-goosey and a higher priority than pushing north. Taking a look at the SPX structure. So first of all, 4340 is the October 31st JPM, not the September. The Septembers are sitting right here. This should say 46,700. It got truncated in the balloon. 4300 is plus GEX. 4150 is the first major line to the upside. We got a little distribution here. Transition area here. Lowest in transition is 4075. I don't see us pushing up into this area at all, but you can see there's just a lot of hiding in there before we start moving upward here. 3900 continues to grow. 38's there. These are two running in close contention with each other. I actually think we'll probably test these areas before we start pushing up and start absorbing, so just pay attention to that. So that's it for today. If you like today's content, or if you have questions, come join us. We have a sign-up page on our website. It's just literally a portal right now. GammaEdge.us, click the pricing tab, fill out the blanks, and that'll get you into the Discord. Risk-free, 14-day free trial, all the tools turned on. Great group of traders, and we're all about teaching, all about helping understand this stuff. Follow us on Twitter, please. Always like it when folks join there, and GammaEdges with an S. And then here on YouTube, of course, if you like today's content, let me know by smashing that like button, and of course subscribing so that you can get notified next time Taylor, Mike, myself record something and post it up into the channel. So that's it for today. Make it a great week. Good luck, everyone, and hope to see you in the Discord. Take care.